Is Facebook dead? Welcome to MG Investing. My name is D. Due to Meta Platforms' latest quarterly reports and the drastic drop in stock price, I've been asked, has Meta Platforms peaked? Will it ever climb above its current number again? Is it worth investing even at these prices? All great questions, so I decided to run Meta Platforms through my comprehensive 4-part stock analysis to provide a foundational understanding for the basis of a decision to determine if all the buying signs are there or if Meta Platforms looks to be going the way of GE, IBM, and Kodak. In my method of stock analysis, called the Dunn method, an easy-to-use, replicatable, and reliable process of evaluating a stock without spreadsheets, insane math skills, or software, I use 4 criteria to determine the overall value of a stock investment. Each criterion is scored on a scale of 1 to 10, with 10 being the highest. DUM, as you have figured out, is an acronym. The D represents durable competitive advantage. Its objective is to determine if a company has a product or service with a strong defensible market position to fend off competitors by way of either patents, proprietary business practices, processes, regional regulatory advantages, various network effect advantages, switching costs, or cost advantages, or economies of scale. The reason this is important to me as an investor is because a company with a durable competitive advantage has a greater opportunity to grow faster, grow longer, and provide a higher rate of return on my investment than one that doesn't. The U represents understand, meaning to understand the company's revenue source or sources and review how successful the company is at generating revenue. The first M represents management, sometimes called M1. It measures how effective management is and its ability to convert its business plan into a profitable reality. The second M represents margin of safety, sometimes called M2. It's focused on the opportune time to purchase a stock while protecting your downside exposure. In this video, part 1 of a 4-part Meta Platform comprehensive stock analysis, I'll discuss whether or not Meta Platform has a durable competitive advantage. Well, who is Meta Platforms? Meta Platforms, formerly known as Facebook, was founded in 2004 and had a very disappointing May 2012 IPO that closed only a few cents higher than the $38 IPO price. It's important to note that even though it was seen as a disappointing IPO by some investors, at $16 billion, it was the largest tech IPO in U.S. history at the time. Meta Platforms builds what they consider useful and engaging products or platforms that enable people for free to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and in-home devices in exchange for undisclosed extraction, packaging, and use of their data for advertisers and other purposes. These platforms allow users to share opinions, ideas, photos, videos, and other activities with audiences such as friends, family members, and the public. Meta Platforms is made up of 6 platforms, which include Facebook, its principal service, which enables people to connect, share, discover, and communicate with each other on mobile devices and personal computers. Through Facebook Newsfeed, Stories, Groups, Shops, Marketplace, News, and Watch. Then there's Instagram. It's a place where people can express themselves through photos, videos, private messaging, and connect with and shop from their favorite businesses and creators. They can do this through Instagram feeds, stories, reels, IGTV Live, shops, and messaging. Then there's Messenger, a messaging application for people to connect with friends, family, and groups and businesses across platforms and devices through chat, video, and rooms. Also, there's WhatsApp, a secure messaging application that is used by people and businesses all around the world to communicate and transact in a private way. And then there's Facebook Reality Labs. It's augmented and virtual reality products such as Oculus Quest, virtual reality or VR hardware, software, and content. Then there's Portal, which helps friends and family stay connected visually through live video. Back to the central question, does Meta Platforms have a durable competitive advantage? The primary tool I use to determine if any company has a durable competitive advantage and the relative strength of that durable competitive advantage is Porter's 5 Forces. Developed by Michael Porter, it was designed to help analyze the attractiveness and potential profitability of a company. It identified 5 forces that make up a competitive environment. There's competitive rivalry, threat of new entrant, threat of substitution, supplier power, and buyer power. Here's a look at how I use Porter's 5 forces. First, competitive rivalry, which looks at the number of competitors in a market and the strength of those competitors. And where there's more competition, eventually a race to the bottom ensues and prices and margin fall quickly, which is not good for long-term profitability of a company or my rate of return on my investment. As it relates to competitive rivalry, free. I don't need to know the actual total number of competitors, but rather I'm trying to get a sense of who the big players are in the space and how much of a challenge they can pose to the company's possible durable competitive advantage. When looking at competitors, they're as dispersed as the number of verticals that Meta Platforms has fingers in. I'm only looking at the larger players here. There are a lot more competitors for sure. In video, Meta Platforms offers Facebook Video, Facebook Live, and Instagram Reels. The big players are YouTube, ByteDance, which is TikTok, and Vimeo. In advertising, there's Google and Amazon. In social media, there's Twitter, Snapchat, Pinterest, ByteDance is TikTok, the Russian Facebook, Kontakte, Tencent's WeChat, Microsoft's LinkedIn, which is more business focused. In peer-to-peer payments, there's Apple with Apple Pay, PayPal, Venmo, and Zelle. In the classified space, the competitors are Craigslist, local online newspaper classifieds, eBay, and Etsy. In messaging, although WhatsApp dominates worldwide, Apple is getting significant market share because iMessages is included with every iPhone for free and becomes the default messaging app for iPhone users. Other services have emerged, and they have also gained some traction, especially once Meta Platforms that announced that it would share WhatsApp data with Facebook. Obviously, that upset many people, and some left the platform in search of substitutes. Services such as Discord, Signal, and Telegram were benefactors, although their growth has not been significant. There's also Slack and Microsoft Teams messaging functions, but they're more geared to business use. Some other helpful questions that I can ask are, what are the quality or other differences between competitor products or services? Within each vertical, Meta Platform faces separate challenges and opportunities. For instance, although Meta Platform's Instagram Reels is trailing behind TikTok in daily user views, it may ultimately win out. Many Americans as well as Europeans have a certain discomfort level with TikTok possibly being a Chinese government-led company, especially since Chang Yiming, its young CEO, made a surprise announcement that he too was stepping down from his CEO position. That's 4 high-profile Chinese tech CEOs that have conveniently stepped down. There's Jack Ma, chairman of Alibaba, stepped down in September 2018. And then there was Zhang Huan, who was the founder and former CEO of Pinduoduo. He stepped down in July 2020. Then there was KYE Show Technologies co-founder Zhu Hua that stepped down in 2021. It has to make you wonder who really has your data from TikTok and what's being done with it. In terms of the social media platform Facebook, it really has no rivals. If you remember at the beginning of this video, I was describing what a durable competitive advantage is. I mentioned that it could be by way of patents, proprietary business practices, processes, regional or regulatory advantages, various network effect advantages, switching costs, cost advantages, or economies of scale. Meta Platforms has demonstrated quite effectively that they have a durable competitive advantage in the sense of creating both data and platform network effects. A data network effect by its ability to gather user data and then package that data to make it more valuable to the advertiser. A platform because it's able to maintain user stickiness and engage in products within the Meta Platform ecosystem. In classifieds, Facebook Marketplace has a major advantage, especially in local markets where you can research more about the person you're buying from or selling to. I think this minimizes scammers in the marketplace. Someone with no real Facebook history and their last post was in 2016, well, you may want to ask a lot more questions before scheduling a meet and greet. And I would certainly suggest somewhere public and not leaving a deposit in advance. It would be nice to see Meta Platforms create more incentives to have buyers transact on Facebook Marketplace using Facebook Pay rather than Venmo, Apple Pay, or Zelle to reinforce the Meta Platforms ecosystem. Are there switching costs? There are some switching costs for most Facebook users that have spent years reconnecting networks with old friends, acquaintances, Facebook groups, and work associates, but the cost isn't so high that they can maintain all users. The switching cost would be the effort to convince everyone in your network to move with you to a different social media platform, which would require them to convince everyone that they know to do the same, which would be nearly impossible. Do customer loyalties occur? Sure, but differently. For example, I use iMessage for everyday messaging to those in my close immediate network. If I'm on Facebook personally or within a Facebook group reacting in more detail to a post of someone I know, usually I keep that conversation in Facebook Messenger. In some countries around the world, Facebook is a way they consume daily news, or at least what they think is daily news. Next is threat of new entrants. This is about how easy it is for competitors to enter the market, for example, cost of entry or regulatory constraints. Here we're looking at time and cost of new entry and specialist knowledge. Are there time and cost constraints to entering this market for new competitors? Absolutely. Although TikTok came onto the scene and made a big splash, it's become an innovative alternative way to share content, build a following, and become a social media influencer if desired, which is slightly different in use than that of Facebook. New entrants are possible, but it is less likely they will unseat Facebook or Instagram as social media platforms. At this point, it would be cost prohibitive to try to compete with meta platforms, Facebook or Instagram. Sure, a company could steal a few people on the fringes that are upset with a Facebook platform for one reason or another, but the bulk of it will stay intact. Is specialist knowledge required? Yes, programming and scaling. Meta platform owns some 1,500 plus technology related patents, so if a company was going to compete, it would have to be an existing company with deep pockets, technological expertise, and a loyal customer base to bring over. Does the Meta platform have an economy of scale advantage yet? Yes, their size at just over 2.9 billion monthly active users, a 4% increase year over year, or its 1.93 billion active users, which had a 5% increase year over year. Add to that its longevity in the social media space, and they have a significant economy of scale. Because of the size of the Facebook platform, it brings a lot of daily users, and that user base becomes a large human search database to reconnect with people, which would not be possible without Facebook. In some ways, it has become a utility just like the telephone. According to research by Statista, the average Facebook user spends on average 38 minutes on the platform. Compare that to the average viewer on YouTube that spends under 12 minutes on that platform. TikTok, a slightly different way to consume entertainment, its users spend an average of about 45 minutes daily using the app, which is down from 52 minutes just 2 years ago. With Facebook, advertisers, well, they can get in front of more people at a much lower cost than traditional TV, newspapers, magazines, or radio advertising. And since the majority of its revenue comes from advertising, well, that makes them king of the hill. Does the Meta platform have a cost advantage? From an advertising perspective, I'd have to say yes. They're better able to target an audience at a much lower cost. The targeting mechanism Pixel, created by then Facebook advertising employee Antonio Garcia Martinez, will be somewhat restrained to some degree with Apple's new privacy policy that allows iPhone users on Facebook and Instagram to opt out of any in-app data collection. Does the Meta platform have technology protection? The answer would be yes, as I previously mentioned regarding the 1,500 plus technology patents that it owns. What would I grade the barrier to entry in this market? I would say it's high. It would require deep pockets, the technological expertise, and an existing healthy, loyal customer base that could be persuaded to a new platform. One competitor that would be capable of mounting a serious competitive threat to the Facebook platform is Apple, for two reasons. One, they have a loyal customer base. Secondly, they would not be revenue dependent on their social media platform. This would allow Apple to introduce a similar social media service as part of their ecosystem, less reliant on selling your data, and use a more transparent way for the consumer and advertiser to both benefit without consumer exploitation. They could enter the market through an acquisition of any smaller existing social media platform. Next is the threat of substitutes. This is about how easy it is for your customer to find a different way of doing what you do. A substitution that is easy and cheap to make can weaken a company's market position and threaten profitability. Facebook has created such a distaste in so many users' experience, especially leading up to the 2016 US election and other events around the world like Myanmar, that millions of people have left the platform in search for alternatives, but old habits die hard. As I said before, it's tough convincing all your family and friends and their family and friends to switch and rebuild another network. There are plenty of substitutes like Vero, Minds, and MeWe, but few have gotten the mainstream audience that Facebook has. Facebook wasn't the first, but they got the technology right, figured out the technology to monetize it, and it became the biggest, and because of that, people feel they have to stay even if they don't want to, demonstrating there's certainly a switching cost. Next, supplier power. Here it's looking at how much influence over prices does the supplier have. The more suppliers a company must choose from, the easier it will be to switch to a cheaper alternative, but the fewer suppliers there are, and the more a company is dependent on the suppliers for help, the stronger their position and their ability to charge the company more, which can have an impact on profit. Due to the nature of Meta Platform's business, supplier power is not a factor, so we can avoid these other questions. And finally, buyer power. Here it's looking at how much influence a company's customers have over prices. When a company has only a few savvy customers, well, customers have more power, but the company power increases if and when they have more customers. How easy is it for buyers to drive the Meta Platform's prices down? This factor impacts advertisers more than consumers, since most of the services offered by Meta Platforms are free in exchange for the use of your data. The next question is, how many buyers are there and how big are their orders? Some of the largest advertisers in the world use Facebook because, well, it works. Advertising dollars represent 98% of Meta Platform's revenue. Also, local businesses love the low cost of entry to advertise to a more targeted audience, allowing local businesses to concentrate exposure of their product or services around more of the right potential customers at a significantly lower cost than would be available through normal advertising channels. Up to this point, Meta Platforms has been able to dictate advertising pricing on Facebook, but now with the new privacy setup on iOS devices by Apple, a user has to opt in and decide how much data they want to share and if they want to be tracked. This makes it much more difficult for Meta Platforms' Facebook Pixel to track users across platforms and have nearly indiscriminate access to a user's data. This will certainly impact advertising revenue and maybe force Meta Platforms to reduce advertising costs short term because it can at this point deliver the same level of targeted customer as it could previously. In summary of Porter's 5 forces, does Meta Platform have a durable competitive advantage? Yes. I rate Meta Platform's durable competitive advantage 8.5 out of 10. Now, some may disagree with me, but I presented a host of reasons supporting my conclusions, which you're absolutely free to disagree with. Make sure you leave those comments below. I learned early in investing that you have to get away from your personal emotions and biases when investing because it will always cloud good decision making. As I said earlier, people have strong feelings one way or another about Facebook, but the facts on the ground are what they are. And a durable competitive advantage score of 8.5 or better is a sweet spot to be for any business. Let me know in the comments below if you agree with my assessment on Meta Platform's durable competitive advantage, and would you have scored it higher or lower? In the next video, I'll continue my 4-part comprehensive stock analysis of Meta Platform using the dumb method as I explore the U in the dumb method, which is understanding how it makes money. If you found value in this video, click that thumbs up and subscribe so you can be the first to be notified of the release of part 2 of this 4-part Meta Platform comprehensive stock analysis, the most comprehensive stock analysis of Meta Platforms on YouTube. Thanks for watching. I'll catch you in the next video in this series.